and upscale it.
Thanks, Amir, for that. But in the midst of a fast deteriorating global security environment, the Finance Ministry could give a big boost to the defense industry, announcing many schemes especially focused on the Make in India theme. Meanwhile, the auto component makers are also seeking hike in depreciation rates on plant and machinery from 15% to 25%. They're also expecting rationalization of GST on EVs as well as some of the components. Sumit Chaturvedi, my colleague, gets us this exclusive story. Hi, Sumit.
Well, in the eye of geopolitical disturbances across the world, the budget is going to give a boost to defense sector in India. Well, when we talk about what possibly could be there, well, there's a push likely for Make in India exports. That has been a long pending effort of the government to push Make in India weapons and export, making easy of these exports to different countries across the world. More relaxation is likely for export of defense sector equipment. As we said, there's a scheme for defense innovation system. Well, a lot is happening at manufacturing front, but R&D and innovation, that is going to be again get a push likely from this upcoming budget on 23rd of July. Then let's talk about overall how the defense sector is in India. Well, it's a target of 3 trillion rupees by FY29, a big target overall there. 6.2 lakh crore was for defense during interim budget. 8 was there. Current defense allocation is below 2% of GDP against 5% of GDP in many countries. So defense is going to be the big, we can say that, the receiver of this year's budget. But there's another sector which is unrelated from defense, but auto sector. Well, that's auto components. Well, certain demands have been made by auto component sector people, and it is hike in depreciation on plant and machinery. It's rationalization of GST on EV components. GST on batteries should be brought down. That's another ask. And incentivizing spending on research. So these are the asks for auto component sector. Well, that has been not given much push in the last few budgets, and it looks like it will be given push in this budget, the auto component sector that creates many jobs in the country.
Right, and that's a reporter team highlighting what is it that the chatter is, that what is it that we're going to hear from the Finance Minister just hours from now. All of you, Prakash, Samir, as well as Sumit, thank you so much for taking the time out and joining in today. We're going to take a very quick break, but don't get disappointed. Here's your chance to win brand new smartphones by just watching ET Now through the day today. Here's the ET Now Budget Master Contest, where every hour we're going to be asking you a question. You just have to select the right option and WhatsApp it to us on 888-665-9273. The details are on your screen, and here's the first question for the day. The question is, in which house is the budget presented? Your options are A. Lok Sabha, B. Rajya Sabha, or C. in both houses.
I want to soar above the skies and fulfill my responsibilities with LIC. Paid your LIC premium? On time. Dil ki suno. LIC chuno.
LIC, हर पल आपके साथ.
Introducing the new Kushak. Now starts at rupees 10.89 lakh.
Skoda.
It takes a lot to be a perfect winner who shows excellence in every performance. But there is a thin line that differentiates a winner from a champion. Bank of Baroda takes pride in providing support to champions of the nation.
Bank of Baroda, trusted today, transforming tomorrow.
Do you know what it feels like to have everything at your fingertips?
Yes, boss. I do.
The XUV 700, fully loaded AX7 at a celebratory price of rupees 19.49 lakh.
Sir, the client needs new catalog images in an hour.
Won't happen.
We'll do it, sir.
Oh, N2 college interns. Do it.
तू पागल है क्या? Designing, editing, artwork कैसे करेंगे सब?
You, I, and HPAI.
HPAI laptops with Intel Core Ultra processors.
Take me to the base.
Sir, how was the test drive?
Badass.
New Seltos. Tech is now badass.
Kia, movement that inspires.
पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
SBI। SBI देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैकिंग।
World Food India 2024, aiming to become the food basket of the world. A global event to showcase the food processing prowess of India. Ministry of Food Processing Industries, Government of India invites you to World Food India 2024, 19th to 22nd September, Bharat Mandapam, New Delhi.
What did you see?
The SUV.
Thar rocks. The SUV.
It takes a lot to be a perfect winner who shows excellence in every performance. But there is a thin line that differentiates a winner from a champion. Bank of Baroda takes pride in providing support to champions of the nation.
Bank of Baroda. Trusted today. Transforming tomorrow.
Did you hear about the new budget proposals? Oh yeah, I did. The government is pulling out all the stops this time. They're better. I mean, I've been budgeting my snacks like it's a national crisis. I've been budgeting my budget. It's like they say, in budget we trust, right? Absolutely. If they can balance their budget as well as I can balance my midnight cravings, then we are in good hands.
Fulfill your financial cravings this budget 2024 only on ET Now.
Welcome back. Well, it's the budget day, and what better to get the FII voice to get a sense as to what they are watching out for. Vikas Prasad, the portfolio manager, Asia Equities, M&G Investments, joins us right there from New York. Hi, Vikas. Thank you so much for staying up for us. I'm not sure if you're going to stay for another 3 to 4 hours to hear the finance minister speak, but what exactly are you watching out for? Policy continuity?
Hi, good morning. It's wonderful to be back. We last spoke just before the election results came out, and same as that day, I will indeed be up for the entire India session. So what are we watching for? I'll say a couple of things. One is the budget is coming at a good interesting time because we're in the heart of earnings season now. And the earnings that we've seen thus far, I would say are mixed. are neutral to probably slightly disappointing, in contrast to the previous quarter, in which I thought the earnings results were neutral to slightly positive. So in that context, I think we're probably going to see a little bit more volatility around the budget than we would have had it come 2 months ago or 2 months from now. I've been watching the scroll on the screen and what brokerages are saying. For now, our view is not too different. Capex beneficiaries, clearly, people have an eye on those. The housing finance names, people have an eye on those. I think derivatives of consumption, especially in the rural areas or beyond the metros, that's something that we were watching for. That's something we were positioned for also. We've switched up much of our auto positioning, as an example, over the past 4 to 6 quarters from four-wheelers to more to CVs and to two-wheelers. We think that they will be better beneficiaries. And then also in the two-wheeler space, the companies that are the key suppliers of the leading two-wheeler companies. So that's what we have our eyes on. Broadly, though, the long-term India story remains intact. We spoke about this almost 2 months ago when the election results came out. This remains a very long-term opportunity for investors to be here. Short-term, if I can just add one thing, what Deepika and I have been talking about and what we have been telling investors over the past few weeks is that it seems like we're in one of those moments now where we will outperform, or the chances to outperform will come more from what you don't own rather than what you do own. And in Q2, we benefited greatly from owning auto parts companies, from defense companies, Capex beneficiaries. A lot of those valuations look fully baked now, and that's, I'm saying that. So we have moved some capital elsewhere. So I think the opportunities for relative performers will come from what you don't own in this quarter, as much, if not more so, than what you do own.
I'm going to come to that elsewhere in just a bit, Vikas. But, purely from a budget perspective, of course, there's a lot of increased chatter in what the government is going to do this time around in terms of higher allocations to states where they don't have a majority, Andhra Pradesh, Bihar, etc. Is that going to be a market worry? And then, of course, we've heard it time and time and again, all the powers of corridor talking about warning investors against the kind of risk that the retail is taking up when it comes to options trading. So do you think some curbs to F&O trading could come about? And of course, the big one to try and curb that, perhaps some tinkering on the capital gains tax that I'm sure is not going to go down well with the markets.
Okay, so let's start there, because I think that is something that we do spend more of our time thinking on, more than interest rates, more than the rate of inflation in the short to intermediate term. It's this exact issue. If the numbers I've seen are correct, the retail inflows last year were 1/3 of what they are today. So they've tripled in a year. The Indian options market, again, last I've seen, accounts for 80% plus of all options traded in the world on a daily basis. More than $5 billion of premium, $5 trillion of notional. I tell investors and colleagues and people around the world all the time that the SEBI and RBI are two of the best financial regulators in the world, if not the best. And I've got to think that they have their eyes on this. It's hard to make a prediction, but any hiccup in the flows here, even in the short to medium term, I think will have a direct impact on small and mid-cap positioning in particular. And for that reason, we have curbed the incremental allocation to that space. We have been more focused on large caps for this reason. This is more than just a tactical trade. It's something that we're thinking about. So I think that is the right reason. There could be something there. In the short term, it would not be great for markets, as you highlighted. The long-term story remains intact, but this is something that we are thinking about on a daily basis. So if you look from the end of 23 to the midpoint of 24, our allocation to small and mid-cap names and off-benchmark names increased substantially. The pace of that increase has halted. And so we're waiting. There will always be more opportunities. Part of the reason is there's so many companies coming public now, so we've saved some capital for that. Our cash remains very, very low. We're fully deployed, but it's easy to, given the names that we're in, to move around into IPOs. So that you're asking the right question. That's my view, is that this is something that's more of a concern than the short-term inflation rate or what the interest rate is, or what the GDP growth rate is in this particular month or this quarter. Coming back to your question on the budget, we are prepared for some sort of stimulus, direct or indirect, to help consumption, rural consumption in particular. I saw again on the scroll some of the names, like the staples names that are sought to be beneficiaries or thought to be beneficiaries of this. It's more complicated than direct stimulus from the government, but I think that would help. They already trade at pretty high valuations relative to the earnings growth that they are set to deliver. So our positioning there is quite concentrated in the staples sector. We don't own many of the names, similar to IT services. We're in the mega cap names, not in the small and mid cap names. And what we've seen in earnings there also justifies that thus far.
Your statement that outperformance will come from what you don't own rather than what you own. You've trimmed position when it comes to auto, very concentrated when it comes to IT and consumption. But are you worried about the earnings growth at all? Because this quarter so far, we have seen a bit of an earnings decline, and even financials for that matter haven't really performed. So where incrementally are you putting money to work? I'm sure it can't be PSUs, because that too is very elevated right now.
Yes, well, Aisha asked me this the day before, the day the election results came out, and the day after the exit polls came out, we took an opportunity to lighten our positioning in some of the PSUs, in defense in particular. I am surprised by the rapidity of the rally there, and so we have taken advantage of that to further reduce our exposure to PSUs, including the defense sector. We are still positioned there, but much less so than we were before. Some of that capital has made its way into the private sector banks. And what you see is, even with underwhelming results from some of the leading private sector banks, as we saw over the weekend, the market gravitated towards them. The market has gravitated towards the large cap IT services names, some of the staples names. And the signal there is that there is nervousness about valuations in some of the sectors. If you look at the Capex infrastructure companies, so the infrastructure derivatives, some of the names there, yes, the order books are very large. Yes, the earnings delivery has been beating expectations the last few quarters, but then also you look at the valuation, even on an intermediate sense, and it means to us that we should be underweight there. So private sector banks is one area that we have added more capital to. We have reduced some of our holdings in PSUs, as we said, and concentrate more of the capital in the stable space, because we don't think that overall the enthusiasm that the market showed right after the election results, we didn't think that was justified. Also, what I will say is that, again, we have saved some capital. There are some very interesting IPOs that are coming up in which we are likely to invest. Not so much in the tech sector, healthcare broadly defined, some of the manufacturing names, and some of the semiconductor companies that are part of that supply chain. Also, we're pretty excited about those.
Vikas, thank you so much then for staying up till late. And next we'll chat about what, if at all, a Trump victory would mean for equity markets for the world at large, not just US. Yeah. But see you again soon. Let's talk about the India Construct. The Nifty implied open indicates a very, very quiet start for us. But what's the action likely to be like post the budget? What's the historic trend like? I'm going to hand it over to Nikunj. He's got Kunal with him, mapping the budget day trends for markets.
See, Aisha, historically, we've seen that markets, if they rally ahead of the budget, they tend to sell off after the budget. But this time, it's uniquely different. You had a big event adjustment, and bulls have really marshaled ahead, and they've really taken a giant leap forward. And we've seen unbelievable gains, not only Nifty, but across the board, large cap, mid cap, small cap, defense, railways, after the election verdict. So the setting on the table for the market is uniquely different. Local momentum, record high, rich valuations, support of local flows, and also a lot of global strength. So the backdrop is uniquely different. But on budget day, since it is budget day, what has been the trend? The trend over the years has been that the volatility has narrowed down. And 10 out of last 13 budgets, the average intraday swing, upar niche, the average intraday swing is about 2 to 3%. But like I said, that this time the unique positioning of the market is that we've seen the highest pre-budget rally. Yes, highest pre-budget rally in last 7 budgets, including the interim budget which we saw in the Feb. So the market positioning is, I won't say it's overextended, it is certainly high in terms of commitment. That's the average swing, and the average swing as the percentage changes, you can see it. 2017 onwards, different market conditions, you want to watch that data, follow my hand and see the average swing. The average swing on the budget day is anywhere between 2.5% to about 3.5%. So we are in for a swing. Swing does not mean a fall. Swing does not mean a rally. we are in for a swing. That's the nifty move 1 week prior, from 2015 onwards to July 2019, 1 week later. So the trend is that if markets have rallied 1 week prior, they tend to fall or they tend to correct a bit. So the reverse actually has happened. So are we in for that mild correction? Why am I saying that? Look at the data here. 2% rise, 2% fall. 1.5% rise, 1.5% appreciation. 1.5% rise, are we in for a mild fall? Kunal Botra, are we in for a mild fall? Ye to history hai bhaiya. It's just a coincidence, right Kunal?
Absolutely yes.
That what
3 out
goes
of
down?
5.
3 out of 5.
Yeah.
That means the history is favoring that we could be in for a mild decline.
Correct.
So what is your understanding of this?
And to add to the fact, Nikunj, I was looking at the volatility analysis over the last 10 years, 10 budgets specifically. We are almost at one of the lowest curve in terms of the volatility curve. So the India VIX is at 14.5 to 15.5 on closing yesterday. We were at a point in 2020, 21, 19 where the VIX was 20 plus also on an average. So we are going in with a very low kind of volatility, which means the markets are expecting that this could more or less be like a non-event. And the swings which you mentioned, 2.5 to 3% as an intraday swing, major part of the swing actually happened in 19, 20, 21. And that's why you're seeing the average. Right now, if you look at the last 2-3 years, 22, 23 and 24 Feb, the swings have been just 0.5% to 1% only.
Okay, so how should our viewers approach the market today?
So I think we should now approach with more of a positive bias. We've seen the markets go into a correction pre the budget in the last couple of days. I think the froth seems to be out. Mid caps and small caps have corrected. Large caps are stabilizing. They're acting as more of a balancing effect. So I think it's a fantastic construct in terms of the market parlance.
Okay. So what is your data indicating?
So we've called out some very interesting data, Nikunj. And on the budget day as well as post the budget day, there are some interesting facts. Now 9 out of the last 10 budgets which we've analyzed, the FMCG index has actually closed positive.
Okay, here's the one.
Exactly.
So the trade is by FMCG.
By FMCG.
The trade is by
Private
large cap banks.
Yeah, private sector banks and financial banks, financial services, these indices have closed positive 7 out of 10 times.
You want to stay with this graphic. Now Kunal is making a very, very important point here, which is that 9 out of 10 times, 9 mein se 10, 9 out of 10 times markets have gone or FMCG stocks have gone up after the budget. And I'm going to walk back again. And Kunal, there's this whole talk of rural India,
correct,
whole talk of, consumption getting stroked. So any hint towards more money, direct tax cut, more rural-based schemes. The first port of call is autos and FMCG. So
exactly,
FMCG really could be that good trade for the day.
Exactly.
Second is private banks, safe and stable.
Correct.
In a market where value is not there and everything is overbought, private banks are still looking cheap.
Yes.
So these two trades really could be the trades for the day.
These are the trades for the day in terms of sector themes.
Okay, anything else as we rotate on?
So I think in terms of the other data, there is one sector which has been very weak. So ITC of course has been on a stock side.
Very good data.
Extremely positive.
9 out of 10 times ITC's rallied on the budget.
Yes.
Could it be 11 on 10?
I think it should be 10 on 11. Yeah.
10 on 11,
yeah,
sorry, 11.
Absolutely, yes, okay. I think so.
Okay. Yes, what else?
So, and in terms of the weaker sector, the only sector which has been weak 7 out of 10 times on the budget is the media sector. And that too because of the overhang for Z, etc. I think that's the only reason why. This is a fantastic data. 10 out of 10 times, these three stocks have been closing negative on the budget.
So, Chambal was up yesterday.
Yeah.
Is it time to sell or go short?
So, this indicates that it's an intraday correction.
Okay. Texmaco Rail, darling of the market.
Yes.
Book out, cash out.
Cash out.
Sesha Sai paper, why have you picked it up? It's not like a...
No, it's come as a interesting stat. Yeah, it's a data over the last 10 years. Fertilizer stocks, railway stocks and many of the defense and the PSU names, they've actually closed negative on the budget day.
Well, fantastic. So I'm going to just hand it back to Aisha and Anisha. And the setting on the table, Aisha and Anisha, is that markets are at an all-time high. Market cap at an all-time high. Valuations are looking stretched. But volatility is missing, flows are strong, budget is expected to be a no event, and if history is anything to go by, I think we'll say the line again that the pitch is strong, the climate is sunny, the dark clouds on the horizon are something which really needs to be taken care of. That's it.
And the team is ready. So let's take it across to Sandeep Samarwal as well. Welcome him in the studios and find out what is it that he's expecting from Finance Minister scored today, her 7th budget. Sandeep, hi, good morning. What's the anticipation? I know no correction is anything to worry because if election outcome is anything to go by, it will be lapped up in no time.
Yeah, so I think one is the liquidity story, which is the domestic liquidity gushing around. The second is the overall valuations, like Nikunj was saying, like at market cap to GDP of 155%, at valuations which are much higher than historical valuations. We need the budget to deliver actually for the markets to move higher. So my view is that if the budget disappoints, and I think the only way it can disappoint is if they don't give relaxation on personal taxation. And those have to be significant. I think incremental tweaks here and there and announcing them as big tweaks or big changes is not going to help. So they've got a buffer of 1 lakh crores to the RBI dividend. They should be bold and give around 1.5 lakh crores of relief to individual taxpayers, because the multiplier on this is very high. So 1.5 lakhs crores of tax break can actually lead to ultimate incremental consumption boost of nearly 3 times of that, 4.5 lakh crores. So if 4.5 lakh crores get consumed more, they can actually get GST on that, which itself covers half of it. So I think it's a simple math. Whether the bureaucrats in Finance Ministry want to recognize this or not is something we need to see.
You don't think any curb on F&O is going to come under the purview of the budget? That's going to be SEBI's domain?
Yeah, it's SEBI's domain. They have to come out with the consultative paper first. So I think it's a process. It's going to happen, and it's a given now, given the announcements which have been coming through both by the SEBI chief a few days back at an event and yesterday economic survey. So the curbs are going to come. The extent of the curbs, what are the pressures the exchanges are putting, because their profitability gets impacted substantially, brokerage profitability gets impacted. But I think it's very clear that the curbs are coming. It's only a timing issue.
But it won't be via the route of an STT increase, you think so?
STT increase makes no sense, because for a compulsive punter, it's the margin he has to put. So as long as he can put 1.5 to 2 lakhs of margin, he'll punt irrespective of whatever is the STT, whatever is the tax. Those things don't impact. The only thing which impacts him is that he should be unable to trade. And that's the only way it's going to get curbed.
Okay, so those were the discussions on STT, but you talked about how consumption could be one of those areas to watch out for, and Kunal was just highlighting that data. 9 out of 10 times FMCG index has ended in the green, ITC so as well, and that's because there have been announcements to spur consumption. Are you willing to make fresh bets within that sector? And if yes, are you looking at durables? Are you looking at QSR? Are you looking at perhaps staples? Which category would you first go to?
So I think the most beaten down sector today is the QSR space. You look at stocks like Westlife, Devyani, Jubilant Food, or any of them. That's hardly revived. So I think any tax break which comes through on the personal, so it will be a definite boost to those companies, and that coming on the top of what's a normal monsoon or above normal monsoon, which will ultimately lead to lower food inflation and higher boost overall consumption. So I think things are in place for a consumption boost in India. The only thing we need is some tax incentives to go and supplement it. In any case, there will be a revival in consumption, but then it will be muted if there are no tax breaks. If there are tax breaks, then I think it can be significant. So I think the QSR space would be first, the durables would be next, and then the consumer non-durables.
Okay, so consumer, durables and then non-durables, that's the pecking order. But what would it take for interest to come back in intra-EPC players? And I'm talking about Dilip Bilkons and PNC, etc. of the world, and not just L&T, because they have fallen off the investors' radar. What do you think will kind of get the investor back to these companies?
See, while the overall infrastructure investment cycle has been very strong, the road sector is something which has, where we've seen it fall off sort of. So it's gone into a plateau. It's actually declined last year.
It's not fashionable anymore. It's all about defense and railways.
Defense, railways, or other infra projects like The power projects are getting set up, transmission towers are getting set up, data centers are getting set up, but the road sector still needs huge investments. We've seen the state of Nasik highway, Goa highway, everyone is highlighting that. So I think there is investment required there, and many of these companies were deeply focused on only that sector.
True.
And those are the ones who are suffering right now. The rest of the infra space is fine.
Interesting. So that's a view coming in as far as infrastructure is concerned. But what about financials? Because a lot is expected for MSMEs as well, because that was one of the focus areas. Economic survey talked about how you need to kind of deregulate a lot of sectors as well and provide that push to SMEs as well. Is that something from the microfinance scene that you'll be watching out for?
See, the flow through of economic survey to budget typically historically has been very low. So I don't know what they can do. I think the thing which they did where you have to pay the MSMEs within 45 days, otherwise you can't account for it in your expenses, etc. That itself was a very good initiative. I have specifically seen companies or talked to companies who have said that this has greatly benefited them actually.
Okay, so that's the view coming in. Those were some of the sectors that we discussed, but we are not done yet. Lots to chat about. We'll slip into a very short break. Don't go anywhere. Your budget headquarters at ET Now.
Co-presented by SBI Life, अपने लिए अपनों के लिए. Co-powered by new Seltos with Kia Connect. Tech is now badass. Co-powered by Canara Bank. Together we can. Co-powered by LIC. जिंदगी के साथ भी, जिंदगी के बाद भी. Co-powered by Motorola Razr 50 Ultra with Google Gemini. In association with Capri Loans, फर्ज निभाते हैं. In association with Quant Mutual Fund, multi-asset, multi-manager.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Introducing the new Kushak. Now starts at rupees 10.89 lakh.
It takes a lot to be a perfect winner who shows excellence in every performance. But there is a thin line that differentiates a winner from a champion. Bank of Baroda takes pride in providing support to champions of the nation.
Bank of Baroda, trusted today, transforming tomorrow.
What did you see?
Thar rocks. The SUV. PhonePe proudly presents Share.Market. Open a Demat account by 31st July and get zero brokerage till 31st December on FNO and intraday. Equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
टिप चाहिए? पैसा लगाना है? तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं. जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I want to soar above the skies and fulfill my responsibilities. With LIC. Paid your LIC premium? On time. दिल की सुनो, LIC चुनो।
LIC, हर पल आपके साथ।
Proposals in keeping with the convention.
Listen.
I do not propose to make any changes relating.
पता नहीं which one should I go for, नया या पुराना? Of course the new one. It is more beneficial to you. That's not a question. My hair is dull and I need protein-based shampoo for that. Protein? What protein? I thought you were talking about the new tax slab. Why would I talk about the tax
Discussions
slab?
for the budget have
Oh my
begun.
God.
Watch Budget 2024, Lead to Lead. Only on ET Now.
Well, it's I would say a rarity to get the real version of Sandeep Sabharwal in our studio. It is not the AI version, the real version. Finally, you've arrived, right?
This is also hologram.
Okay, now why are we standing here? Because we're going to be walking up to the wall, and we have our first, जिसे हम कहते हैं ना खुलजा सिमसिम, वो जादू की का पिटारा. So Sandeep Sabharwal is going to be opening up, and we'll open up our first Jadoo Ka Pitara today, Khulja Simsim. And what will come out from there are stock ideas. And in today's market, well, stock market and stock tips, stock advices, they are actually better than gold. So what is in Sandeep Sabharwal's treasure? And before we do that, let's say once again, Khulja Simsim. So the first stock which has opened is Mayur Unicoater. A very unusual name, mid-cap stock. It is in car ancillary manufacturing.
Car ancillary, so car seat covers, as well as they do a lot of work on the footwear side. So I think if you look at this company stock, it was at the same level almost 10 years back.
Okay.
So then they went through a tough period where the entire footwear industry went through tough phase. There was dumping through from China, and they did well on the auto side, but then they got a lot of orders from overseas, but the execution was very slow. So I think now everything seems to be coming in place with the standardization restrictions on footwear. Imports will not be so easy. So I think most of the old stock of non-certified, BIS certified footwear has been sold now. So from here on, I think we'll see revival on footwear. Some of the large orders they have won from global OEMs, they'll start getting executed from this year onwards and grow rapidly over the next 2-3 years. It's a very under-owned stock, not very fancied at this stage. Stock is cheap relative to the mid-cap universe, like the valuation will be hardly 20-30% of the top-weighted mid-caps.
So hold it for 2-3 years?
So hold it for 2-3 years, and I think it should give good returns.
Vatek Wabag. You've been holding on to this stock from 2-3 years.
Yeah.
And it's done rather well. It's a pure play on water purification.
Yes.
How's the business doing?
So the business is going very well. Like they won very large orders. Not in like previous year, the order flows was okay. The year prior to that, they got huge orders which are now starting getting executed because there's a cycle which is there when the orders start getting executed and turnover comes in. So The water space is something where globally now there is a recognition of water shortage. Like 2024 is the warmest year on record, and there are water shortages everywhere. So I think there will be demand coming in from all sort of industrial water regeneration, zero water discharge. There are huge orders coming in from the Middle East, etc. So they are doing very well. They have done very well, but
okay, we will come back to it because the finance minister, she has arrived at the North Block. North Block is the finance ministry's office, and that's where the entire finance ministry and some of the top secretaries, they sit. So the finance minister has reached her office from a residence to her office. She would be meeting a team. Then there would be a photo op, which is a photo opportunity with her team. Earlier, the budget used to be more like a bahi khata. Now it is a tablet. And then she will go to the parliament. And in less than 2 hours from now, Union Finance Minister Srimati Nirmala Sitharaman, she would be standing on the floor of the parliament to present her 7th budget and the first budget of Modi 3.0. But I want to go back to that Sim, our Jadoo Ka Sanduk. We've discussed VTech Babak. SH Kelkar, tell us some more bit about your company. What I remember, it is into a very interesting business, perfumery, right?
yeah, so perfumes and fragrances, there are two businesses for which they supply the ingredients. So here again, it's a similar story. So the theme in Mayur and SH Kelkar is similar. They are in very good businesses. They are strong in their business segments. But due to some reason or the other, they went through a subdued growth period, because of which the stocks remained subdued. And now both the businesses are coming through. They faced, like SH Kelkar faced issues on getting inputs for its products because of the Chinese issues.
It is making essence for food. It is making essence for cosmetics. It is making sugandh banata hai, basically, to put it very simply.
Yeah, and flavors.
Okay.
So
But
flavors.
it's a high margin business. I remember when the company went public in 2018 or 19, that's the time it went public, it was the talked about stock. Great return, great cash flows, strong margins, but it has never lived up to its expectations.
Exactly. So that's what I'm coming to, because they were trying to bid for some large orders from global MNCs. So one of those orders has come through, which could become a significant part of their business over the next 2-3 years. The base business is reviving. So it's not a company which will grow at 20, 30 or 30, 40%. It's a company which will grow at 15, 20%. And if margins improve, then the valuation would look cheaper. So I think it's a steady growth business where some of the initiatives which they tried in the past are now coming through, like Mayur. So both are similar stories where global supplies to large customers will drive their growth over the next 2-3 years.
Okay, and I'm going to talk about a disclosure from Sandeep's behalf. He's actively managing portfolio, and he has a vested interest in whatever he's recommending. So the disclosure is something I just want to bring out upfront, that whatever you do, please consult your financial advisor. And Sandeep has a vested interest in talking about these stocks, because either he owns them or his clients they own them.
Yeah, people should assume that I also own, my clients also own, and have been holding for a long time.
And if the stocks go up, you will make money. Let me put it this way.
Yeah, if the stocks go up, yeah, of course.
All right, Anisha, it's all about having more fun today. Budget is important, but I guess, the whole excitement which happens in television studios that day, that is what makes, at least for me, budget day the most memorable day. And now that Sandeep has come, trust me, it only takes the budget day or some special occasion to convince him to climb the wall and come to our office.
Oh, well, yes, the excitement is truly palpable in the newsroom today, and of course it will be palpable as far as the floor of the parliament is concerned as well. In less than 2.5 hours, we'll hear the finance minister present the budget. But before that, what are the topics perhaps that you should be having on your radar, and how you should position your portfolio? That's something that we're putting across to Shivangi Sarda as well. She's joining us from Motilal Oswal. Shivangi, hi, good to be speaking with you. First up, are you mentally prepared for some sort of curbs coming in on the derivative side, much talked about, whether it's the RBI, SEBI, or even the CEA yesterday?
Good morning. Thank you for having me. So we've seen that, markets have positioned itself at the higher zones, and the FII's long-short ratio has also tanked up. So somewhere there is some sort of, hope for a consolidation over here, or some sort of profit booking that I might say. But of course, the eyes are on the capital gains, and some of the expectation is also on some announcement for the stock market, specifically catering to the derivative market and a curve there. But overall, I believe that in the long term, it's all going to focus on the growth of the country because it's the first budget of Modi 3.0. So of course, we are looking at some specific pockets like consumption, infrastructure, and also some of the PSU banking names. So these are the sectors on radar. But of course, some sort of volatility cannot be ruled out.
Okay, consumption, infrastructure, PSU banking, these are top themes that you're watching out for, but top recommendations or top stock specific calls?
So first on my radar is Grasim. We've seen that this stock is fairly doing good, and after a good retracement, it is again forming a base for a good up move right now. And of course, infrastructure and construction is also one of the sector pocket to look out for. So this stock is looking quite positive from here onwards. So recommending a buy here with a target of 29.50 and a stop of 27.50. Now, the second pick is from the consumption space, Tata Consumer. Now, of course, all the consumption stocks are on radar, but this stock is looking quite positive. After the breakout, it's given a good follow-up buying as well. Longs are being built up over here, which means that, comfortably the stock is getting ready for a potential upside. So recommending a buy here with a target of 12.50 and a stop of 11.80.
Those are the top recommendations coming in from Shivangi at this point of time. But PSUs, those are, that's one space which has been overheated per se. But, what's the take, Sandeep, on PSUs? Book profits out or stay tight?
I think the valuations are excessive in PSUs, and most of the companies some companies have seen some improvement in fundamentals, but most of the companies have just got re-rated. So companies which were trading at a PE of 10, they are trading at a PE of 70, 80. So I think that's the risk in PSUs, and people should be careful. I would think that the probability of a corrective move is much greater than significant appreciation from here.
Okay, so that's a view coming in as far as PSUs are concerned as well. But overall, that's the take as far as the budget is concerned. Continuity is something the markets are watching out for. So the entire push on Capex and manufacturing and PLI schemes, that has worked wonderfully well. In fact, that's the next question. All those PLI schemes that have come out, they have definitely kind of spurred manufacturing. What more can the government do? Could there be more extensions? Could there be more tax stops available in terms of making fresh investments, greenfield, brownfield, etc.? What's your expectation?
See, the government is sold on the idea of PLIs, so I think they will do more initiatives out there. In my view, an overall benefit which is given to all companies is much more beneficial because it does not distort the market. However, there are talks that there will be further PLI announcements, so I think that's
Pardon me for that interruption. I'll have to just cut you there. Let's take a break. 30 seconds from now, Ravi Dharmashi would join us, and we're going to shake the Sanduk again. Kulja Simsim with Kunal right after this break.
Master 2024 is back. Watch ET Now on 23rd July, 8 AM onwards, and answer the budget-related questions that will be flashed on your TV screen. Send your answers on WhatsApp. Type BM24 space your name space question number space right option and WhatsApp it to 888-665-9273. Lucky winners stand the chance to win brand new smartphones. Watch Budget 2024 Leap to Lead on 23rd July, Tuesday 8 AM onwards, live on ET Now. Rise with India.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
टिप चाहिए? पैसा लगाना है? तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं. जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
What did you see?
Thar rocks. The SUV. PhonePe proudly presents Share.Market. Open a Demat account by 31st July and get zero brokerage till 31st December on FNO and intraday, equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Introducing the new Kushak. Now starts at rupees 10.89 lakh.
Skoda.
It takes a lot to be a perfect winner who shows excellence in every performance. But there is a thin line that differentiates a winner from a champion. Bank of Baroda takes pride in providing support to champions of the nation.
Bank of Baroda, trusted today, transforming tomorrow.
वेलकम बैक। सिम सिम खोलते हैं एंड कुणाल इज रेडी। कुणाल चलो हाई फाई करते हैं।
हाई फाई।
लेट्स ओपन द सिम सिम एंड व्हाट डू वी से व्हेन यू ओपन अ सिम सिम? खुल जा
सिम सिम
सिम सिम, खुल जा सिम सिम। सो कुणाल, यू गॉट टू आइडियाज। HAL,
हाँ,
इट इज अ लॉन्ग।
यस।
थोड़ा लेट नहीं हो गया लॉन्ग के लिए?
No, I think in fact stock is down 15% from the last 1 month swing.
But
high.
it is up 100% also.
Yeah, so I think as a trade, it's a fantastic opportunity.
This is a good trade for the budget.
Correct.
Buy HAL, stop loss?
4,650 and the target is 5250.
Okay. What is the next one?
The second is from the IT pack and it's Infosys, which I am very bullish on. The stock has given a breakout. So we are looking out for a target of 1920 with a stop loss at 1750.
Why is that you don't have ITC? Because 9 out of 10 times, according to your data, ITC has gone up on the budget day.
Yeah.
So why didn't you choose ITC?
So ITC was also one of the picks, but then I thought let me just try and differentiate with some of the other names.
Okay. The
And
third one is Nalco.
Nalco. That's another name which has managed to give a very strong breakout. 220 is a target, 175 stop loss.
So your advice to our viewers is that go long into the budget.
Correct.
Don't try to be cute.
No.
Don't go against the train.
See, we are already into a very strong global market flow. So I think in that context, there is, I mean, if there's nothing surprising negatively for the budget, I think we have to stay on course with the global markets.
Okay. Ravi Dharmesh is also ready. Ravi, good morning. Nice to have you. So, is it going to be just another day, or it's going to be a big day with swing? And today market will react to what we will hear on the budget.
I think for a change this time around, budget is not a non-event. It will lay out the intent of the government with the next 5 years point of view in how they are going to prioritize their spending. And I think that can lead to a lot of change and transition in the way you position your portfolio. So I am looking at it. It's a keenly monitored budget for sure.
So Ravi, what would be that directional impetus from the government, which in a sense will convince that there is going to be continuity, and this budget in a sense is going to be giving that springboard for the economy to leap forward and for markets to maintain its upward trend? I mean, what is that construct which you would be watching out for?
So from broad directional point of view, there is no doubt about it that they'll continue with the thrust on the growth. It's just what we are keen on monitoring is that thrust going to be provided through Capex related themes, or is it going to be provided through revenue expenditure related theme? And from that perspective, our base case is that Capex continues. Incrementally, there might be not a big jump since this is this is a follow up after the interim budget. So the intent was quite laid out, 17% growth in Capex. Will there be a further bump up in that? Maybe a small bump up. But incrementally, I think the turnaround might happen on the RevX side, and that might be a signaling that there is acknowledgement of the fact of two things. One is political compulsions, and second is that there is actual rural distress, and there is a need to revive the same. So I am looking out for more an incremental shift towards RevX and continued thrust on the Capex.
Some data, which is that this is the highest pre-budget rally in last 7 budgets. Historically, markets, if they've rallied ahead of the budget, they tend to adjust those gains. And even though the importance of budget over the years has got diluted, budget still tends to be this swing factor of 4 to 5%. Are we in for a post-budget sell-off, or this momentum which markets have added in last couple of weeks, whether it's budget or liquidity, you think that is here to stay?
I think the volatility is definitely here to stay. Levels are elevated. So even a minor negative in budget can swing the markets in a big way. So I don't rule out 3, 4, 5% kind of a move in the market today. And it could be either side. I don't want to hazard a guess. But I do want to say that I think the efforts of the government will be towards putting slightly more money in the hands of the rural and the middle class. And if that is there, then broadly it will be what it will do is broad base the markets and the economic boom that we are witnessing right now. The economic boom is quite narrow and probably at the top of the pyramid. That needs to get more broad based, and I think if we see some steps towards achieving the same, that would be a positive.
So now it's time to open the Sim, and Ravi Dharmashi's Khulja Sim is ready. So Ravi, when we open a Sim, let's say it together. Let's say Khulja Sim, Ravi. Why don't we say that together? Khulja
Sim.
Okay, let the Sim open. And what is there in Ravi's Khulja Sim? Energy transition, number one theme. Ravi, why are you betting on energy transition? Are you betting on energy transition from coal to solar or coal to some other sources?
So, see, energy transition is a very broad theme, and I think it's the need of the humanity. And this time around, even the economic survey gave ample space to energy transition as a theme, and it talks about how there will be various trade-offs that we will have to make. So it is not one particular sector that gets impacted. In fact, it impacts across the board, so many sectors. The way the power is generated, so that is obviously one. Solar, wind, moving away from thermal and crude, and of course power transmission, power finances, in general power equipment, and then of course the consumption of electricity, which is electrification of everything. So there are many buckets which get impacted through this theme, and just that the larger trend is so strongly in place, we cannot deny it. In fact, all governments are acting towards facilitating and enabling the same. So we already have seen so many subsidies and SOCs being given to green manufacturing and industries focused on renewables. But I think there is a need to further do that. And there is a second trend that also impacts this, which is we might move away from fossil fuels, but there might be a case that if in the renewables, we might become dependent on another bloc, like say China, instead of the OPEC. So there is a need to move the supply chain also away from China, and the world recognizes that. So both the things are playing into the manufacturing theme, and I think that is one of the reasons why we remain bullish from the next 5-7 years perspective.
Second one, Ravi, something one would say expected, but there are a lot of ways in which you can perhaps bet on rural recovery. So Ravi, what is, if you think that rural recovery is round the corner, what is the best way to really bet on this rural recovery trend? Autos, FMCG, NBFCs, what is your sense?
So first of all, I don't say that rural recovery is here and now. I am looking for those lead indicators which will tell me that government is worried enough about the pain in the rural economy, and they are incrementally going to start focus on it. So I think we have already seen some steps where the PM Awas Yojana has gotten further boost. I think that is the best way to revive the rural cycle. It kind of plays. See, the biggest multiplier effect that you get is from the real estate and construction cycle. And if we can do the what the current real estate and cycle is more focused at the top of the pyramid, and if we can move that to the bottom of the pyramid and have rural revival based on a real estate cycle, I think that would be great. That is the low-hanging fruit, in my opinion. The larger, of course, the theme is that we do, spend a little bit more on the welfare. There are some state elections coming up, and there are compulsions of coalition politics, which means that there might be increase in the revenue expenditure also. So that will probably lead to increase in consumption at the bottom of the pyramid. And any sector and company really focused on that opportunity should also be a beneficiary.
Wrap it up with the third theme here, private capex revival. Ravi, this is a theme which in a sense markets have been betting on. But the private sector capex has not picked up. That is what evidence is showing. Do you think this is a case where the stocks have run up way ahead of the actual cycle has started?
See, till FY23, almost 80% of the the burden of capex revival was being lifted by central government. FY24 was a year where incrementally state governments started contributing. Private sector as a whole has not yet picked up. Okay, you can say now, since it's been almost 3 years that the private sector is doing fantastic profitability, and even Chief Economic Advisor has pointed it out in the economic survey that the corporate sector had 5 lakh crore profitability in FY19, and we are now almost near 20 lakh crores. So that tells you that they have made good money in the 3-4 years. The capex incrementally is not necessary to for anything else, but actually for their own growth prospects. The growth prospects are good, and if you want to sustain that, you have to do that thing. So I think government has done enough to incentivize the private sector capex cycle, and we should see the numbers start panning out in the coming time. However, I would still expect that in this particular year also, they might provide certain new sectors might get added to the PLI, certain more capex related subsidies or tax ops might be provided. I don't rule that out, because it is very important that this transition happens from government-led capex to private sector-led capex, and I would be looking out for some incremental news over there as well.
Okay, yes, absolutely. The Chief Economic Advisor yesterday as well talked about how private sector needs to push in the capex agenda and can't put it just on state and central governments. Thanks, Ravi, for making time and speaking with us, and hope to catch up with you post the budget announcements are made, whether it stacks up versus your expectation or not. But moving on and welcoming on board Purinju Vilayat, the MD and Portfolio Manager, Equity Intelligence India, joining us on the show. Purinju, hi. Good to be speaking with you. Hope you're feeling a bit better. I know you're under the weather right now. But talk to us about the market, because we are talking about how the pitch is set for a sunny outlook, but there could be dark clouds on the horizon as well. What's your sense? Are we in for a bit of a reversal? Because from the election day, the Nifty itself has run up, what, 2,500 points thereabouts?
Good morning, Team 80 now and the audience. I think this budget is not going to be very important. It will be like, may go almost like a non-event, or, there may not be anything significant whereby market can break down or market can go in a big bullish wave. So it's going to be an okay budget. There is nothing much to with a significant difference to come, either in taxation. Of course, something like the very high personal income tax in India, which was 42%, and now it is, I think, a couple of budgets ago it was reduced to 39%. That, I think, still very high, and it's not good for India. There are reports, I don't know how true it is, so many people are going out of India because of all this excessive taxation. And later, after paying so much tax, then there is, a dozen of other taxes coming up, including GST. So I feel there will be more liberalization of the personal income tax. That is very much required. And I think the markets are looking for a direction. So that direction is there, very much intact. And as far as markets are concerned, the kind of money flow happening, through SIP and various, the whole country, the whole population, every state and every tier 2 and 3 cities, towns in the country, the investing habit has gone up significantly. Looking at equity investing, unfortunately, in the initial phase, a lot of them youngsters are going into the F&O, option trading kind of thing. But that also will evolve and become more healthier going forward. There is no doubt about it. So we are going to see a very healthy capital market for the next 5-10 years and more. There will be corrections. There's nothing to say about dark clouds, as you mentioned. There is, as I told you, there is a directional, movement for the economy along with the markets. So equity investing culture will grow much further. There are a lot of positives happening around capital markets and equity investing. And it is true. The most important thing is that there are pockets of fraud in the market. This is everybody's telling, not only me, anybody coming on your channel. In the last maybe 6 months, everyone, all sensible people are talking. There are pockets of fraud, manipulated stocks, managed stocks, and with the low liquidity, some stocks are kept very high. So small investors, first-time investors in the market should be extremely careful about this aspect. Don't go by tips in the market or just because of the stock price movement, momentum investing, growth, those kind of things. People, especially the youngsters, the beginners. Why I say beginners? There are half of the active players in the market today are beginners. They might have entered in the last 1, 2, 3 years. So they are like they haven't seen big cycles. So it can be a trap for many of them. So that caution is always advised by everybody coming on the channel and talking. And but at the same time, market is healthy, market is richly valued. Maybe some of those companies with fraud, they also may be good, but the problem is they could be priced for next 5 years. So there will be disappointment. We call it time-wise correction. So that's the kind of market I am seeing today.
I'll go to Sandeep. Sandeep, there are two areas where markets know that they need to be addressed. Whether they get addressed in the budget, whether they get addressed outside the budget, we don't know. Actually, one area, not even two. That's the F&O. The volume activity in the F&O. It needs to come down. Otherwise, it's going to prick like a bubble. The economic survey yesterday referred to it. If there is some indirect way in which the budget mentions how to curb the F&O activity, are markets prepared for it?
I think markets are well prepared for it. I don't think that's a big issue for the markets. Everyone knows the restrictions are going to come, and restrictions will be imposed in a manner which will significantly restrict retail involvement in these products. So I don't think that's a major thing. Yesterday it was announced in the economic survey. I think Finance Minister might make a mention of it, but ultimately it's SEBI's domain. So ultimately the norms will come from SEBI.
If there is any change in the taxation structure, 10 becomes 15 or 1 becomes 2 or 1 becomes 3, could that disturb the market?
Given the levels of the market, I think it could be disruptive. So any increase in taxation or perceived increase in taxation will have a negative impact for sure. So I think they should desist from it, but whether they can or not, or they do it in the guise of making everything simple and similar across all asset classes, but I don't think it will be taken positively because it increases the cost of ownership of equity. So if you are paying 10% tax and you end up paying 20%, or your holding goes from 12 to 24 months, it's an indirect taxation, and that will have an impact on the markets.
Okay, let's go to Pranab now, and we're going to be opening the SimSim. And Pranab SimSim always has some very interesting ideas. And there you go. Let's open it up. It'll just come up on your screen. Let me turn and see what is coming there. Clear blue skies right now. And there you go. Proteon. Why do you like Proteon, Pranab? Any reason why you've liked this stock? And you've been owning it for a while?
No, Protein it has been our latest stock pick. We have been buying it last few months in the weakness at the counter, because there was some large seller selling some maybe 5-10% of the holdings. And this is a solid, professionally managed company. And, This is a company where you can bet on the digitization world of India and the world. They are even planning to go beyond India. And, they have been into traditionally, the legacy business has been the PAN issuance, and they have been, the custodian like for the NPS, the National Pension Service, and the Adult Pension Yojana. So they have been almost 100%, they have been making some little money in those transactions happens. And they have given a wonderful service, and everybody is a winner in that. Now, I feel this company is also associated with ONDC, and in all the new age businesses we are building up. And this is originally an NSE promoted company many years ago, 15 years ago or so. And now it's around 6,000 crores market cap. It came to some 4,000 crores recently. So we thought of, as a compounder, this is not going to double, triple in a way. As a safe compounder, high quality company with a futuristic business model. And they are entering into new and new verticals in digitization and, record keeping kind of activities, which India and the whole world is moving in that direction. So it's a very sober idea, nothing to be excited, but it can be a decent compounder. On that expectation, we have been buying, I think we hold around 4%. Slowly we have been accumulating. And that's all. So I want to say very clearly, this is not a stock recommendation. Stock has moved in the recent past, but we are comfortable holding on to.
Pranjo's second idea, Proteon, Raymond. You owned Raymond in the past, you've liked it in the past, and you still like it. Why is that?
Raymond, I should say it's a past idea. And again, this has moved up significantly in the last 1 year and 2 years and 3 years since we bought. Something like 8x, or from the lowest rate, it has gone 10x. So here, basically, I found, if you remember, initially when we discussed the stock on it now, this used to be around 3,500 crores market cap, and the IPO of Manyavar was coming at around 20,000 crores valuation. That was reports in those days. So now, even today, including both the companies of Raymond, Manyavar is much higher priced. And when we say Raymond's office building is valued at 6,000-7,000 crores, and the company was available in the market at 2,500 crores. So it doesn't match, and it's a solid business, solid brand name, and decent balance sheet. Now the company is almost debt free. So and the real estate, different verticals. I don't want investors to buy the stock at these levels. I'm not recommending. It all depends on your gut feeling. Now, what is listed currently is the real estate business and the engineering verticals, including the aerospace and defense, which was acquired as Maini Precision recently. So this existing listed company right now will be 3 companies eventually. That's what promoters management has indicated. The real estate will be demerged, and the engineering will be 2 companies. One will be aerospace focused. The other one will be the remaining automobile and other defense-related business. So I think a lot of value unlocking, and the value unlocking to the full extent in favor of the minority shareholders is happening. So the stock has moved from 2,500 crores to more than 20,000 crores today. But I feel, so we have exited half of our holdings, and we are holding on to the remaining for the longer term. So investors depends on which sector you are bullish on. Now, lifestyle is a very different business, which will be listed after a month, and the remaining is, as I told, real estate and engineering. Especially the aerospace can be a space to watch. They can grow very big. It's a 30-40-year-old relationship with companies like Safran and all globally, and Volvo, kind of very strong vendors. So we have to wait and watch. It's not a cheap stock right now. It was cheap a year ago, 2 years ago, and 3 years ago. And investors should not get carried away with ideas coming up like this. Always stick to valuations and your comfort zone of valuation. And for that, no investor need a lot of doing CFA kind of things. It's all a very simple common sense approach, and you can find the safety, margin of safety, and the growth potential
Sure.
and how your investment can grow. Yes.
Puranju, sorry to interject. It's the finance minister who's on air right now. That's why we have to, kind of make it a bit more brief. But that's the finance minister with the Bahi Khata. The entire setup of Bahi Khata has changed from the old files and paperwork to a tablet now. But that entire status remains the same. That holds the key to success of India and the growth going forward. So that is what is the important bit right now. The finance minister started her day, of course, very early today. 8:30 a.m. is when she reached the finance ministry. Now she'll be going towards the Rashtrapati Bhavan to meet the president, and then she'll come back to the floor of the parliament to present it by around 11 a.m. So that's the latest coming in. She did meet all the ministry officials and all the participants and her teammates as well. Late last evening as well, she visited all those people who have been helping her create this budget. And today, of course, she's all set to present that on the floor of the budget at around 11 a.m. She's moving towards perhaps the Rashtrapati Bhavan to meet the president, and that's the visual up for you on the screen. The finance minister making her way with that Bahi Khata and that red tablet, which is made in India, of course, towards the Rashtrapati Bhavan. And that is something that we're watching out for. Less than 2 hours now, 11 a.m. is the time that you need to watch ET Now very, very closely, because we'll be able to dissect the budget for you and tell you the impact analysis with the best of the voices, the Think panel coming in from corporate India, as well as the best of the tax experts as well. We're counting down to the budget speech, 1 hour 47 minutes to go. But overall, Nikunj, looks like that the market setup is a bit heavy going into the budget, and the data that you were talking about earlier as well does suggest that there could be a bit of a turnaround. But amidst all of that, a lot of stock specific recommendations coming in from our experts and the Khulja Simsim that we have been presenting.
Let's recap them actually one by one. So whom are we starting with? My producer will have to give me a cue on which.
Let's start with Sandeep, because that was the one that we did first. Yes.
Okay, so we're starting with Sandeep Sabharwal. And what does Sandeep Sabharwal have in terms of his Khulja Simsim? Something's wrong with the graphics.
I do remember Mayur Uniquoters being one of them.
Okay, you've got Mayur Uniquoter from Sandeep Sabharwal. You've got VTech Wabag, which is coming from Sandeep Sabharwal. And the third one which he's got is SM Kelkar, which is coming from Sandeep Sabharwal. Then let's look at Ravi Dharmashi. What are the themes he's got, and where he's got in terms of his ideas and themes coming up? Energy transition, rural revival, and then private sector capex. And some more stock ideas this time from Puranju. He's got Proteon, where by the way disclosure is that they own 4% of the company now. Second, Raymond, and third, which we did not discuss, is Tata Com. So, and this is just the halfway through in terms of what the Simsim has to offer today. So I'll insist our viewers that you keep on saying Khulja Simsim, and we'll make the magic happen of opening the Simsim. And now we are about a minute away from the market open. The first, pre-open rates will kick in any second now. So do I hand it to Aisha, and she's standing on the wall, and she's going to be capturing, the budget day, arguably the most important day now of the year after the election day, because this is the 7th budget from Nirmala Sitharaman, but the first budget of Modi 3.0. The budget is coming at a time when the economy is on a good pitch. There's a lot of sunshine, but she has to take care that there are no dark clouds on the horizon. Aisha, over to you.
Yeah, absolutely. And looking at the Nifty pre-open rates, at least so far, it seems like it's going to be a little bit of a stable start with a marginal positive bias. But you know what? Better than our Asian counterparts for sure. But who knows what happens post-budget speech, which is going to be at 11 a.m. Let's see. Some amount of volatility surely is par for the course. The first rates then on your screen, fairly tempered. We're clinging on to that 24,567 odd level. The Nifty Bank as well, fairly tempered. But I think the big cue is right here, the NSE advanced decline ratio, because we're well in the green, the hands. 1430 is the count that you're seeing to the green line, with about 400 or to the decline. So the market breadth continues to be extremely buoyant. I want to talk about some of the big, movers and some of the news specific ones. Federal Bank, for instance, is going to be one such case in point. Remember, the RBI has given the go-ahead and the nod to appoint KV Subramanian as the MD and CEO. So this is going to be a new sensitive stock for sure. Oberoi Realty was a buzzer yesterday. They've planned multiple launches for the festive season as well. They're looking to launch a couple of new products as well. Suzlon, they came out with their numbers. The revenue has seen an uptick of about 50 basis points, margin expansion as well. Then, of course, you've got Zensa Technologies as well, wherein the dollar revenue has seen an uptick of about almost 4.25% coming in. But it's budget days, so let's bring up the budget-sensitive stocks. And Kunal was highlighting as to how ITC has been a gainer 9 out of 10 times in the previous budgets. So let's see what some of those big boys are up to. Holding up about almost $2 in the green. 468 is where that stock is right now. I can see M&M prop up a fair bit. There is anticipation that perhaps there's going to be higher rural allocation, and that's keeping some of these rural-focused plays fairly buoyant. M&M holding up now almost 1% in the green. There's Ultratech Cement as well, which has seen a recovery coming in. Eicher Motors as well, I can see holding out well. Let's see whether there's any respite coming in. Reliance was fairly beaten down along with Wipro yesterday. So is there any green? Just a little bit. It's latching on to that 3,000 level per share so far at least. That's, of course, Adani Power holding up a solid 2% in trade as we speak right now. I want to see what HDFC Bank, Kotak Bank as well are up to. Remember, Kotak also was the soured one after its numbers. HDFC Bank starts off a little bit in the red. Kotak holding up by about almost 0.5%. But largely, one would have to say it's pretty much a day like yesterday, Nikunj. It's a bit of a seesaw. You've got a tug of war between the bulls and the bears. But let's see, post 11 o'clock, post the budget, who actually has the lion's share, the bull or the bears?
What is your understanding of the rural end of the market, which is that the government will definitely do something to kickstart the rural economy? What can be done there, and which are the stocks to buy?
Okay, I think a few weeks ago, Nikunj, if you remember, we discussed this theme. The rural and agri sector could be a sector to watch, and the inputs like fertilizer or irrigation companies. So there can be some special focus of the budget on this rural and agri theme, which is very much required. Nobody will rule out the rural stress we are going through, which is almost the highest in the, if you say, last many decades. So it has its own structural problems and reasons for that. You cannot simply blame the government, but ultimately government has to give very special focus on employment creation, as everybody else mentioned about it. So the rural sector is the main focus. So I feel that in national fertilizer, and we were casually mentioning about some of those big fertilizer companies, they have moved up by I think 40-50% the last few weeks. That doesn't mean anything. There are agrochemical companies. I think not everything is managed well. There are some of those companies are not really professionally managed, so investors should be very careful about it. I think there should be some focus because they have been doing so badly in the case of agrochemicals. It's a sector to watch, but there is no hurry to buy. They are doing very badly even today. For the last couple of years, they are doing very badly. So a turnaround can result in 50%, 100% increase in some of those companies engaged in this business. When it comes to employment generation, textile is again one sector where maximum employment can be generated, the manual labor, so guarding and many verticals of textiles. So again, government have been always have been already providing incentives for the textile, but there can be more focus on textiles. And now India is in a sweet spot as far as textile industry globally concerned. Much of the Chinese market share is coming to India after Vietnam and Bangladesh. So that there is a tailwind in that regard, and government's push also can come, which can really make the industry grow at a much higher rate in the coming years. And some of those listed companies could benefit immensely.
Right. Puranju, green, renewable mobility, all of that is also a key focus area for energy transitions. Have you researched that area? We've never heard much from you around that. Do you have any kind of a play represented in your portfolio from there?
We used to have exposure to some small companies like Select Energy, but it's too small, and now it has grown up also significantly. Currently, we are not holding. There are companies one has to watch, but a lot of those future is discounted already in the price of green energy companies. It's not an easy space to identify value. One has to be watchful. There's nothing wrong in investing in some of those companies, but be watchful. Where if you want to invest today, you have to, of course, compromise on the valuation dynamics. But maybe some of them could be worth it. I don't have any particular name coming to my mind.
I'm just going to get closing comments from Pranju, and then we'll recap the Sim, and we've got a whole host of market guests coming up after that. But Pranju, budget, no budget. What will be your next 12-month strategy?
Stay invested. As on today, we are fully invested. We are not sitting on cash, and but at the same time, we are cautious. As I told you, there is froth and there is excesses in the markets, many pockets. But again, we say stock picking, cherry picking of stocks. This is relevant for every day throughout the life. But some situations comes where markets are richly valued. There are some sectors are riding the rally, and some sectors are too fancied. Amateurs are buying into. Large number of investors coming and buying in with a herd mentality. So some of those stocks are definitely overpriced. They will at least the minimum they will go through time corrections. When I say time correction, they may not make any return for the next 2 years, and it can go down by 10-20%. It can move in a range. So we have more of those kind of stocks in the overvalued territory. So, but there are ignored stocks. And some of these ignored stocks, I want to again repeat this, I have been talking about last 7-8 years or maybe more. Some of those companies, good businesses, there is a future for the business and a growth potential, but the promoters are not very, accepted in the market. Perception about promoters could be bad. We call them chore promoters in general terms, in amateur terms. There are changes happening. If you see the last 3-4 years, many such promoters, they have stopped siphoning out funds. They stopped, disregarding minority shareholders. They started respecting minority shareholders because they realized, not because they became good humans, because even those guys, they realize, making wealth, creating wealth through the market capitalization of whatever the promoter holding 50% or 75%, that makes better sense. After paying tax, showing profits, without siphoning out funds, managing the company very well, appointing professional CFOs and CEOs. So that is the change happening in the country for last many years. Especially, I would say, after this COVID thing happened and the kind of ridiculous valuation happened for a lot of smaller cap companies, they have all learning this. There are some companies yet to turn around that way. They also have to join the bandwagon. More compliance requirements. Regulators are, they are very much active in favor of the minority shareholders to get the due what shareholders should get. That's the one reason regulator is also is concerned about the huge valuation gap between the NAV and the market price of the holding companies. I don't know how it can be tackled fully, but there is a thinking process in the right direction. So the promoters, even the so-called highly ethical promoters, also doing such things. They try to suppress the valuation against the minority shareholders. So that culture also will go away. So those kind of pockets, special things happening, promoters' attitude changing, new promoter, next generation promoter, the son of the earlier promoter taking over. He's better educated and more ethical, more honest. So those kind of changes are the best to identify very special stocks in a special situation and do value picking or a special cherry picking of stocks in this kind of a market. General market, one should not bet on a general market at this point of time with a big hope. I don't think it's fairly valued, if not overvalued, overall Indian markets.
Purinju, great to have you on the show as always. Thank you for taking the time out and speaking with us today.
Thank you. Thank you so much, Aisha.
Okay, settling in mildly higher. Actually, no, even that mild bit of green, you know what, has completely cooled off from there. I can see an absolutely flat Nifty 50. 24,509 is where we're currently at. Flat for the Bank Nifty as well. And the metal and the IT index are already slipping into the red. But here's how you stand a chance to win brand new smartphones by just watching ET Now throughout the day. Here's the ET Now Budget Master Contest, where every hour we're going to be asking you a question. You just have to select the right option and WhatsApp it to us on 888-665-9273. The details, of course, are on your screen. And here's the second question that we're asking today. When is the economic survey released? Is it A, before presenting the budget? Is it B, after the budget? Or C, at the same time as the commencement of the budget session? So hurry up and WhatsApp your answers and maybe you stand a chance to win a smartphone.
Budget Master 2024 is back. Watch ET Now on 23rd July, 8 a.m. onwards and answer the budget-related questions that will be flashed on your TV screen. Send your answers on WhatsApp. Type PM24 space your name space question number space right option and WhatsApp it to 888-665-9273. Lucky winners stand the chance to win brand new smartphones.
Watch Budget 2024 Leap to Lead on 23rd July, Tuesday 8 a.m. onwards, live on ET Now.
Rise with India.
Well, amid the ongoing worries about SEBI and RBI pertaining to F&O volume surge, market veteran Madhusudan Kela believes that the regulators will collectively take some action. He also believes that the lot sizes should be hiked rather than tampering or tinkering the STT.
I think, Ajay, even what is going on, I am completely and wholeheartedly supportive of what the government and the regulators are thinking, because clearly, you know, the retail crowd which is buying and selling all this put option and call option, I think there is a lack of understanding amongst them as to what they are really getting into, and it has become a easy way to make money, even though people are not making money, but that hope that we can make money. If out of 10 trades, obviously 1 or 2 trades will go right, and that 2 trades keep on. I'll just give you a very alarming incident which I came across. So there's a friend of mine. He was saying that my mother actually asked me what is this F&O. She's 82-year-old, right? And this friend says, what have you got to do with F&O and what do you want to do? He said that I have nothing to do with F&O. In our house, there is housework going on and there are these 3 carpenters who come. Wow. They don't work between 9:15 and 3:30 because they are doing F&O trading, and our work has got slowed down. Now this is the incident which is like, it's not hearsay. Yeah. Now if this is the level at which it has gotten, so it is alarming. I don't know what the central government can do, because you know what can you do in the budget in this? You can increase the STT, but that STT will increase will not be only on F&O. It will be across the board, or you can have a.
So first 15 minutes of trade and the markets are trading okay. not a great deal. In fact, off highs right now. Sandeep Sabwal is in our studios right now. Sandeep, the entire percentage of capital outflows, we've seen a steady rise. But now, over the years, the feeling is that it's the corporate sector now which need to up their game. And the government may actually keep their share of the capital formation stable from here on. If that indeed is the tilt of the budget today, how do you think market will read it?
So I don't think that the private sector is ready to take over and the entire slack. So the government still needs to contribute. So if there is no increase in capital outlay or there is a very minor increase and they decide more to focus more on sort of the populist schemes, then I think the entire theme could see some sort of correction.
Because yesterday the economic survey did kind of put a lot of impetus on capital outlays to the states. There are several mentions out there that it's a state level issue. State levels also need to up them. One is getting a sense that probably because the previous budget was just nearby, right? So a major bump up on top of that, which itself saw a 10% hike in capital outlay, perhaps is expecting too much, isn't it?
Yeah, so but I think 10-12% increase is good enough. So I think because the base over the last few years has increased substantially, like they have been increasing it by 25-30% for the last few years. So now I don't think we can expect another 20-30% increase.
Sure. Okay, Sandeep, good to have you in the studios as always. We'll let you go on that note, and let's now welcome on board Sandeep Tandon and find out what he's expecting from the markets and the budget this time. Sandeep, hi, good morning. We've already months to date scaled up about 4% on the index alone, and I'm not even talking about individual stocks of the small and the mid caps. What's the anticipation from the budget? What would the budget have to do for the market to keep the gains intact?
So if you look at just the behavior aspect, and if you look at the current government continue with the same ministry, and the ND or allocation was something similar, which is a clear message that government wants to showcase that continuity remain as it is the way it was there in the tenure 1, tenure 2 and not tenure 3. With that background, if I have to read, then I will only conclude that the continuity will be there, which means reform continuity will continue, and all sort of agenda which government was running in terms of Capex will also continue. But only big change which we expect, since government has luxury of some surplus right now, and I think given the rural economy which has suffered post-COVID, and I think there will be a special emphasis on increasing the disposable income of the middle class family. Okay, so I think that is a big change which can happen. I think most of people are expecting, and I think I do expect something on similar line